Hello guys, welcome to my channel. Today I'll be teaching you guys how to trade forex as a beginner. Now if you know you're a beginner, you've not traded forex before and you're looking for a way to start forex, to start trading, things you need to do, everything you need as a beginner, everything you need to start trading is in this video. So all you just have to do is just sit there, watch this video to the end, and I promise you you will learn the basics of forex. Now without wasting much of your time, let's get straight into it. Now the things we'll be looking into in this video is: number one, what is forex market characteristics, how forex trading works. You learn how the forex trading works, how the forex market works, all those things, and the tools you need to start trading. There is tools you need to start forex trading. Okay, number one, what is forex? Now forex in short form, forex is the short form of foreign exchange. In other words, forex is foreign exchange in full meaning. Okay, now forex is the global marketplace where national currencies are traded against one another. It is the largest and most liquid financial market in the world. This is the largest market in the world, which means area markets no reach this one. Even this market we don't nature, you know, reach this one. This is the largest market in the world and most liquid financial market, which means if you want to buy, there are sellers ready for you to, there are sellers ready to sell, and if you want to sell, there are buyers always ready and willing to buy. So it operates 24 hours a day, 5 days in a week, which is from Monday till Friday, and 247. It's always, okay, not 247, 245, yeah, always active 24 hours a day and 5 days in a week. Okay, let's continue. Forex is about the relative value of money. If you have ever traveled to another country and exchange local currency. Now these are for those who have traveled from this country to another country. If you, for instance, you are in Nigeria and you've traveled, maybe let's just say Ghana or United States of America or the UK, you won't be using the naira currency over there now, so you guys exchange currency. You exchanging that currency, that process is called what? Forex exchange. Okay, let's continue. How does this forex market thing work? Okay, currencies are always traded in pairs. When you trade forex, you are simultaneously buying one currency and selling another. Simultaneously, the word simultaneously means doing two things at the same time, which means you are buying and selling at the same time. Okay, now the exchange rate tells you how much of the second currency is required to buy 1 unit of the first. If you notice, forex currencies, forex pairs, they do appear in pairs, like first currency and the second currency. Now the first currency is always equal to 1 unit, in the sense that first currency, to get the first, for instance, okay, for example here, euro USD, the logic, if the rate is 1.10, it means that for you to get 1 euro you have to spend 1.10 USD. Okay, let's just say, for instance, now dollar rate in Nigeria, dollar rate is around 1,400 and something. Okay, let's just say 15. Now the first currency there is USD and the second one is the Nigerian naira. Now 1 USD, how much will it cost you in naira? That's what we are trying to say here. And okay, we just say that the dollar rate in Nigeria here is 1,500, which means it will cost you 1,500 to just get 1 USD currency. Hope you guys understood. Next one, forex market characteristics. The characteristics of the forex market: number one, high liquidity. Forex is the most liquid market in the world, with a daily trading volume exceeding $7 trillion. Oh my god, how much are you making? You watching this video, there are $7 trillion moving around the market every single day, and out of this $7 trillion, how much are you making, or how much will you be making? Because you have to make some money out of this $7 trillion. There's a whole lot of money there. Okay, the impact, this means that you can buy or sell large amount of currency instantly with minimal price disruption. Under normal market conditions, there is almost always a buyer for every seller. Yes, just like how I said initially, if you want to buy, there are sellers ready and willing to sell to you, and if you want to sell, there are buyers ready and willing to buy from you. That's how liquid the forex market is, and it's 24/5. Yes, 24/5. I said this initially. 24 hours a day and 5 days in a week, and the 5 days is from Monday till Friday. Yes, it follows the sun across 4 major trading sessions. Yes, and there are 4 trading sessions in forex market. There are 4 trading sessions, and I hope most of you know this: the Sydney session, the Tokyo session, the London session, and the New York section. The Sydney section opens around 11 p.m. on Sunday, 11 p.m. and closes around 8 a.m. on Monday. Okay, so it opens around 7 p.m., which means on Tuesday it will open around, for Tuesday Sydney section, it will open around 11 p.m. on Monday, 11 p.m. Monday, and close around 8 a.m. Tuesday. Now Tokyo session, which is the Asian session, opens around 1 a.m. in the morning and close around 10 a.m. Okay, now the London section, which is the most active section in the London and New York section, especially the overlap, is the most active liquid time in the market. That's when liquidity is active in the market. Okay, now the London section, that is 8 a.m. in the morning till 5 p.m. in the evening, and the New York session, which is the American session, is it opens around 1 p.m. in the afternoon and then 10 p.m. midnight or night rather. Now, when one session closes, another is already open or beginning to open. Now, allowing traders to react to news in real time, regardless of their time zones. Now, if you look at this thing, you notice that when one trading session is closing, another one is already open, or another one is already open when one trading session is, for instance, the Sydney session and the Tokyo session. The Sydney session closes around 8 a.m. and the Tokyo session around 1 a.m., which means the Tokyo session has been open even before the Sydney session closes. Yes, that's what it means. Okay, let's continue. How forex trading works. How does forex trading works? Okay, the structure of the currency pair. Now, every forex trade involves 2 currencies here, which I've said initially. The first currency is called the base, and the second one is called the pool. Now, as a beginner, you have to know that the first currency in the currency pair is called the base, and it's always equals to 1 unit. You just have to know that the first currency is the base, and it is always equal to 1 unit. Now, and the second is the quotes. Now, for instance, let's say Euro USD, the exchange rate is 1.0850. I repeat, for example, Euro USD, the exchange rate is 1.0850. Now, what this means is that for you to buy 1 euro in USD, you need $1.0850 for you to buy 1 euro. Now, okay, let's continue. The base euro, the currency you are buying or selling, is always equals to 1 unit. Yeah, I've just said that it's always equal. The first currency paid there is always equal to 1 unit. Why the quote, the currency is, it tells you how much of the quote currency is needed to buy 1 unit of the base. Yes, I think I've just explained this now. Now, going long versus going short. Okay, now unlike the stock market where most people only buy hoping the price goes up, we don't do like that in forex. We buy and we sell. Okay, but the stock market, I think they only buy. Okay, in forex you can profit just as easily when the currency value falls. Exactly, when the currency value falls, you can also profit, and when it strengthens, you can also profit. So let's always profit in both directions. Okay, now going long, you buy the pair because you believe the base currency will strengthen against the quote currency. Okay, and you sell when you believe that the base currency will weaken against the quote currency. Typical trading process. These are just the process you need to go through, things you need to do before you trade, before you enter with positions. First of all, okay, you analyze. That's the analysis. And you have We have two types of analysis: the fundamental analysis and the technical analysis. The fundamental analysis has to do with the news, okay? It has to do with the news, and technical analysis has to do with the charts. Looking at the chart to predict, okay, where will this go, where will that go, okay, USD JPY will have to buy to go up, so for that I'm going to buy. That's the technical analysis, just looking at the past chart to determine or predict what will happen in the future. That's the technical analysis. And the fundamental analysis is the news, okay? You decide the British pound is going to rise against the US dollar. Then after the analysis, after the technical analysis or your fundamental analysis, now the next thing, after the analysis, believe you must have decided what to do, either to buy or to sell. Now after the decision made, you now have to just, next step there is to execute. There's execution. You open a buy. Okay, for instance, you say that Euro USD is going to buy. Now, okay, you open a buy order for Euro USD or GBP USD, whichever one. After buying, of course, you have to monitor your trades. Because after a while, you just go through your trade, profit and loss. After the whole monitoring stuff and the seeing all your unrealistic profits and everything, the next step is just to close. So you are either going to close in profits or close in stop loss. Or you can also close in break even. Okay, so it all depends on you. So these are just the processes. Typical trading process. You first of all analyze either your fundamental analysis or your technical analysis. Then after that, you execute. After executing, you monitor. After monitor, you close. That's it. Now you need to start. What are the things you need? You don't really need expensive things to start, okay? Just your mobile phone and the internet connection. That's the only things you need. Now to start forex trading, you don't need a physical office exactly or expensive hardware. But you do need a specific digital toolkit, that is your phone and your internet connection, or your tablet or your iPad or laptop, whichever one you have used for trading. Okay, now if you have a phone, a tablet, or an iPad and an internet connection, the next thing you need to do is to find yourself a good forex broker, a regulated forex broker. Mind you, brokers really matters a lot. The kind of broker you use matters a lot in this forex industry. Okay, now your broker is the intermediary that connects you to the global currency. Yes, these are just like the middlemen between you and the financial markets. Just for instance, maybe you want to buy a phone and you don't know where they are selling that phone, that particular phone you want to buy. Now you have a friend or you have someone that knows where they are selling the phone. Now that person you know that will take you to the place they are selling the phone is called the broker. He's the middleman. He's the one going to connect you to the person or the place you are going to buy the phone. Okay, so that's what broker does. They connect you, like the intermediary between you and the market. Now a trading platform, this is your MT5 or MT4, whichever one you want to use, or your C-Trader. A lot of trading platforms there. I think but the most popular one or preferred one is just MT5, or you can as well go for MT4. But most people do use MT5, like me, I use MT5. Okay, now this is a software where you view charts and place your orders. Yes, MT5 or MT4 or the trading platform or C-Trader, whichever one you want to go for. Just a place where you do what? You place your order. Yes. Now C-Trader, don't for a more modern user interface and transparent execution. Then trading view, this is where the analysis are done. Yes, your technical analysis. After analyzing, you can either go to your MT4 or MT5 or C-Trader to execute your trade. Okay, that is it for today's video, and I hope you just learned one or two things from this video. And if you know you learned something from this video, just hit the subscribe button, because the next video will be talking about the terminologies, all these terms, all these pips, calculate pips, leverage, spread, bid and ask price. We'll be talking about all those things in our next video. So if you know you don't want to miss those videos, subscribe to my channel, turn on the notification button, and I promise when I upload the video, you'll be notified. Thank you.